This video is largely why I made my YouTube channel in the first place, because I want to bring some clarity to financial markets. I think many of you know me from X, StockTwits, TradingView, whether I'm just posting, creating, or in fact being a builder or employee at those companies for the last decade, by the way. So I've had a front row seat to a lot of the modern trading strategies or what things are happening in the investing universe, professional side and retail side. So I've seen the absolute beginner trader get started. I've seen the absolute most expert trader talk about what he sees now on the new landscape of trading, or strategies perhaps that he or she are working on that are pretty advanced. In fact, I often find that the most advanced traders, like the ones who work at these trading desks or large funds, they're just excellent at shorting. They have really smart, back-tested shorting capabilities. Super short term though, not sort of these long-term plays, just very short term. And in some respects, they're just taking advantage of a lot of the new traders out there. And once again, that's why I'm making this video, because I see what's happening. And I think one of the key things to discuss is technical analysis, specifically sort of what is happening on the social web, whether it's YouTube or X or somewhere else, around technical analysis. So technical analysis is essentially a way whereby people use past price information to try to make better decisions in markets. After all, markets are made up of buyers and sellers just like you and I. Everything you see on this chart is from a person just like you and I. Of course, now they might be coding algorithms, so you probably are trading against a bot of sorts, right? So there's a bot in here trading against you, but that bot was still coded by someone else just like you or me. But maybe they've had more experience, more back testing, they work with a large fund. It could really be any of those things. But the point I'm making is that after you put this all together, you'll understand that technical analysis is not a magic tool. That's the first thing everyone must understand. It's not a magic tool. I can't tell you how many videos I see, whether it's a YouTube video or some other short-term video of someone saying, oh, look here's the gap, so I'm just going to buy and wait for the gap to fill. It's my secret strategy. You'll win 90% of the time. Not true. No one wins 90% of the time. Or look at this overbought trend here on the RSI. This is a short, or all those types of things. Once again, not true. And I think one of the most important things about modern technical analysis that you're seeing is that 90% of traders lose money. Let me just write that down. 90% of traders lose money. So if you see videos of people saying, like, this is my technical analysis, this is how I win, sign up for my subscription, buy my book, all this stuff, but 90% of traders lose money, and that video has millions of views, how can that possibly be working? The math just doesn't work out. In fact, I would wager that 90% of traders lose money actually because of videos like that, and they follow it. Like, those videos are reinforcing this stat every day. Those videos are getting millions of views. They're on Instagram, TikTok, YouTube. People are going out and trying them, and they're just getting wrecked. It doesn't work like that. Because the first most important thing about markets is that if trading were easy, everyone would make money. In fact, I need to even write that down, because that is just one of the most classic lines out there. Everyone would make money. Not even make money, everyone would be rich. Let's do everyone would be rich. So that's just, I think, point number one. The thing is, markets are hard because not everyone is rich. In fact, most people have had horrible experiences in markets. So you just have to look at the inverse of this. If trading were easy, everyone would be rich. But no one is rich in trading, except for a very small percentage. Thus, trading is really difficult. So you can really work this sentence to find the truths of what you're getting involved in. And then number two is that technical analysis is not a magic tool. In fact, I'm just going to write TA for technical analysis. So it's not a magic tool for quick wins. But this is where this video gets interesting, where I'm really happy a lot of you have stuck around. Technical analysis has a ton of potential though. That's the thing. It has a lot of potential. You just need to know where it fits in, and you need to have a super realistic approach that it's not always going to win. In fact, if you really want to use technical analysis in the right way, it's that every time you perform technical analysis, whether you are someone who has studied it and gotten some designation of sorts, whether you've read countless books, whether you've traded like myself for over a decade, every time you draw a technical analysis, you should know this might not work. In fact, I might be the only person on this planet drawing this on the chart. Now, if you're the only person drawing it on the chart, why would it come true? No one else is watching that. There's no programs or algorithms watching that. So all you're trying to do over and over again with technical analysis in that case is you're trying to win by sort of making things up that no one else is paying attention to. There's kind of some harsh realities here, actually. Now, what's really important about technical analysis, where I do think it has a place, it's how I use it, is it can be a great tool for slowing down and being patient. Okay, so now we're getting to the topic where I think technical analysis works. I think I've given it too hard of a time for the start of this video. Now we're going to talk about why I like it, why I use it, because I believe it is great for being patient. That's number one. So what do I mean by that? Well, I'm going to approach this from the eyes of a new trader. A new trader hears about a stock and they suddenly rush in and just start buying it, right? Maybe they read a news article and suddenly that news article says this thing's going to the moon. So they just rush in and buy. In fact, let's just go ahead and let's just buy right now. Let's just take a paper trading example. Let's buy 10 shares of this symbol we're looking at. Okay, we bought 10 shares. That's because we just read a news article, so we think it's going to the moon. I mean, we're already down 40 cents, but more importantly, look how slow this is moving. So that's another thing a lot of new traders don't know. Markets are not nearly as active as they think unless you are trading quite literally the most volatile, newsworthy instruments in the market at any given point. But to do that, you have to be on top of every single news headline. I'll make a video about that strategy, actually. But we've been sitting here now for the last few seconds and nothing's happened. We bought 10 shares and we're already down 40 cents and there's nothing going on. So someone who rushes in without having patience is just bound to get burned. There was no planning, no process, no research, nothing of the sort. So here we are. What are we to do then about that? Well, we'll probably just end up taking the loss because we'll get frustrated, or maybe we'll buy more, which is even worse because we don't think it's moving enough. We're trying to get it going. Markets are patient. There are millions of people transacting all over the world, coming and going. They are not going to move for you unless you have over $100 million. It's going to be really hard to move markets however you like. And so this is where technical analysis comes into play as far as I can tell, because it brings in patience, which is point number one here. Let's see if we can get patience back down. There we go. So what you might do in this example is zoom out, look at what we're looking at, maybe change the chart type, perhaps even change the time frame to get a longer term time frame. Let's do a week and let's do candles. Let's see what's happening. So we can see this gap here. And actually, quite frankly, this is a pretty interesting level, this gap fill. So I'll make a video soon on gap fills, but there's often this line that gaps act as magnets because something very significant happened here to make this gap. Gaps don't happen all the time. Look at the gap here as well. Price closed here and then the next day opened here. Something happened in those off hours, earnings, news, a release to cause that spike. So if that happened, then that means people thought that was significant enough to move it. They started buying, trading it, getting involved. Now you kind of have some historical background on what's going on. So as I mentioned, though, the first point of technical analysis that I like, and it's why I use it to this day, is patience. So I've already set myself up for my expectations here. If I buy this symbol here, I need to know that this gap fill looks like an area that might be rather challenging for it to sort of break through or go right through. And what we can do with that now is actually map the trade out. So let's just say, for example, and let me make sure you can see my chart. Let's just say, for example, I bought here And because now I've done a little research, I can see what the top is here at 16%. But remember, if I'm watching this gap fill on the way up, I probably should respect this gap fill on the way down. Not that that might happen, but you can just sort of see, well, okay, where's my stop loss going to be? Should it be the bottom of this gap if it goes back into this area? So now the risk reward isn't looking nearly as good because the stop maybe isn't so clear here according to the rules above. But I suppose for this video, let's have our stop be at the bottom as if it broke here and went back into the gap. Now we're looking at a chance to make 16% here, but if everything goes wrong, we're going to lose 18%. Well, we could move it up, but that's kind of arbitrary. What's our rule here? Why are we placing this trade? Where's the stop loss? Let's figure that out. Let's do some technical analysis to understand where we should place our stop loss. So from that perspective, I like technical analysis because ideally it's not so much a moneymaker that people are going to just suddenly get rich on, just follow these rules and get rich, but it's at least going to force you to do some research. And in this case, look at this, by the way, down 20 cents, like nothing's going on. You don't just buy and things go up. That's why this video is to some degree targeted to new traders. And in this sense of patience, where technical analysis is key, is ideally it prevents you from making more bad decisions. So that's kind of where I also think people get technical analysis wrong. It's not a moneymaker. It's not a get-rich-quick scheme. You're never going to do things so perfectly that all you do is just make money because you drew some patterns on the chart. Why'd you draw those patterns? Maybe no one else is looking at them. In that case, you're just drawing something that literally means nothing. But if you're taking that from a different approach that I'm trying to explain here, and you do some research into what your trade actually looks like, so you're looking at past behavior to understand what might actually, be the target level you're looking for, or maybe something that backs your thesis, or maybe something that could cause it to maybe retrace this move, well, then in that case, you've just saved yourself from making a bad trade. Because the inverse of that is you do what we did here, where we're still down 10 cents on, which is we just rushed in and bought. No thinking, just bought. Didn't even think twice, click buy. But instead now we're taking our time, we're mapping the whole trade out. So that's really point number one. That's why I really like technical analysis. So point number two, and by the way, this video is not meant to be a whole deep dive. It's really just an explainer, a mental model on how you should think about technical analysis and use it in the future. So point number two, the other reason why I like technical analysis is that it forces you to do research. That's the other reason why I like technical analysis. It forces you to do research, which is really everything I'm explaining and doing right now. There are two types of traders so far that I've been explaining in this video. One, the newbie, rushes out, buys, sells, reads news, just no process, no rhyme or reason, double down, triple down, quadruple down, no risk management, right? A lot of that stems from not knowing how to do research in the first place. So when you start to get good at technical analysis, when you start to actually observe past behavior, when you look at where an asset came from, even better, by the way, and we're going to get to the third point here. This is actually going to tie together the third point. You don't just have to look at price history. You could look at technicals. I'll make a video on this rather soon. So in this case, if we have simple moving average, where it is, there it is. Well, in this case now we can see a sort of a moving average over time. Let's make it 50, so it's a 50-day moving average. We've got this blue line. We can just see how prices diverged. Gives us some sense of speed or sentiment, or just it kind of eliminates the noise. In fact, sometimes what can be a cool, you'll get better as you do, really start to learn about different ways to study price. If you hide the chart, right? Now you're just looking at a 50-day moving average over time. Look how much smoother that is. And talk about patience and research. I mean, that's a 50-day moving average. And now look, does this just suddenly look like a buy to you? Not really. There's not a whole lot of smoothness here. There's not a whole lot of trend. I mean, are there really other people rushing in to buy this based on this chart? No, not really. But you could start to slow down now because of that insight that you've just developed. And you could potentially start to gauge that, well, maybe there is a trend happening here. And even better, you could look at what happened in the past and then copy and paste this up move to right here, so copy paste. And now what you've just done is you've now got this process for doing the necessary research. Rather than just buying or selling without no research, because of technical analysis, you're looking at different layers of research, which now takes me to my third point about technical analysis that I really like, which I like to call the everyone calls it fundamentals, but this is fundamentals plus technicals. So recall that at the start of this video, I was talking about these gap fills. And one of the things I said about these gap fills is, or these gaps, these open spaces, is that something must happen here to cause such an event, right? Something must really happen. By the way, we're up 50 cents, so maybe the trader who just buys randomly can do pretty well. So here's another gap fill, by the way. Well, technical analysis is fantastic if you also don't use it by itself. Meaning, okay, so what I'm saying is, by the way, I'm just trying to get this to stick. Let's see, I think I have to lock this. Lock, let's see if that does it. Nah, not really, but close. Close. Unlock. There we go. Lock. So point being is, now you're patient, now you're doing research, and now you're combining it with two other schools of thoughts, which is fundamentals. So you're being patient, you're doing research and learning about the price, and now you can try to actually dive in and understand why price moved like that in the first place. So for example, what we're actually going to do is we're going to turn on this earnings icon. And now we can, we now know why these gaps occurred. See this gap here? There was an earnings report right here. That's what this E means. Very interesting. There was another gap. Check it out. There was an earnings report. So now not only have we been patient, not only have we started to do our research, but now we're understanding why the movements were occurring in the first place. These earnings reports are having a huge impact on this specific stock. Now, this isn't going to apply to every single stock or asset or symbol that you study. This is just an example that you can apply and learn from. You're like a detective. You're uncovering the movements. Why did it move? Because you're patient, you're doing research, and now you're finding out why, from the research you had, why it moved in the first place. And now you can pair that up with your technical analysis. So now we know it's an earnings report, and even better, we know they absolutely smashed earnings. So that's pretty interesting, because now we really can map out our trade. So they smashed earnings. So actually this gap fill gives us a little more confidence. Not only did we spot it when we first started this video, but we've also now combined it with this earnings beat. So that actually makes the trade look a little more strong, if you will. In fact, that is even going to lead us to that original long position that we were mapping out here. In terms of these levels looking actually a little more attainable, and now the stop loss perhaps being a little tighter because we know it's smashed earnings report. So we've got our technicals here, we've been patient, we've looked at past price history, and we have an earnings report behind it all. And what's even more interesting is an earnings report is coming up again in just a few months. We can map that out as well and make that a place that we look toward. So this is why I love technical analysis, because of the way you can combine the fundamentals to then confirm the price movements. What's also rather interesting too is you often will see these charts like this. I mean, this is a rather historic chart because this shows 2020 was COVID. This shows the absolute COVID boom. I think many of you watching, a lot of new traders got caught up in this. They made a ton of money on a lot of stocks that boomed during COVID. There's just so many people out there who did so well, but they never sold. They actually, they rode these things the whole way down. Look at Zoom, Peloton, so many more. But we are now doing the research here to understand that. So now we even know, actually, that perhaps all of this price action up here that makes us look like, a stock that's dead was actually a part of a very euphoric moment and perhaps isn't actually reflective of what's going on back down here where we were doing our research and combining our technicals with our fundamentals. So all of this is meant to illustrate the way you can use technical analysis. In addition, one final bonus point that I'm going to add to this video, by the way, about patient research, fundamentals, and technicals. And I'm going to make another video on this. So this is called the bonus. Hopefully you've stuck around this whole time because actually the bonus is pretty important. I do think it ties into research, but I'm going to break it out for a separate process here, and that is risk management. So recall that I said that some people had great trades during COVID, they never sold, and they watched them go the whole way down. Maybe they double dipped thinking that it would come back up at some point. Well, technical analysis does have the wonderful capability to remind you about risk management, which means you have a stop loss in place, or you're actually doing the research to understand where you're going to sell and buy at, just as we have. They're not random. You actually have a plan. You are mapping something out. You are a captain charting out your course with technical analysis. And in this specific example, I actually do want you to focus on this area. So you can imagine if you were a COVID trader in this symbol or other symbols like it, and you rode it this whole way up, well, at a certain point, you need to do research on what's happening in price because, as I said at the beginning of the video, these are people just like you. They're trading and investing. They're watching these charts. They're planning themselves. The experts know what they're looking for, or maybe they've built bots and systems that are doing it too. And while I don't necessarily say that double tops are just, automatic, they at least would have you thinking, okay, I've had this great run. It hit here. I wrote it down. All right. Then it goes up here and you still haven't sold. And it didn't hit the prior high. That's called weakness. Okay, then you wrote it back down. All right. You got lucky. Wrote it back down because it actually went back up. But then it still didn't break the prior high. In fact, each time it hit here, it sold back off and you still held on. I mean, there's really no one to blame but yourself at that point. All of the signs are happening right in front of you. It's not making new highs. It is actually hitting these levels and selling off, which means someone just like you is actually watching this and selling. So this is where technical analysis has that bonus component of causing you or forcing you to do some general risk management. Make sure that you are doing risk management so that you aren't just buying and selling randomly or holding on to something when you have a chance to take a great profit. And technical analysis will help you realize that profit, well, sometimes, just because of the way, taking us back to the beginning about patience and research, the levels here that you map out. So with that being said, thanks for watching. This is my first video on the subject, many more to come. Be sure you subscribe. And yeah, I'm going to be doing this all year, so see everyone soon.